Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin. We've got two counts to look at today, a bullish and a bearish one. We're going to be doing our Elliott wave analysis of those, and then we're going to do some basic technical analysis as well, and then we're going to wrap things up. So without further ado, let's get started. We're here on the 4-hour chart and we're looking at our ABC zigzag idea for Bitcoin, which is the idea that we've completed an A of 5 waves down, we've now completed a B, and we are now heading down in a C to find lower pricing to complete primary wave 4. We don't know where this C is going to come in. We suspect that we may have reversed here. We are going to treat this count as though we have, and then when we come out of a bullish count we're going to treat it differently. That's the whole point of having an alternate. So let's consider this count first. What have we done? So I was saying that since bottoming in 5 waves, 1, 2, 3, 4, 5, had this very complicated 4 here, which was a WXY with a subwave triangle within the B. We came down to bottom here in our A. We have since moved up into a B and are now looking to move down into a C. The move here was a 3-wave move into our A, into intermediate time frame. We then got a 90% retracement. If we just zoom in, right to this purple line here, this is 89 because it's a fib number, but we often say 90%. So we get a retracement to the 89-90% here, which suggests that this is a 3-wave pattern. This is a double combination 3-wave pattern. So this is now a 3-3-5 flat. So we've seen 3 waves, we've seen 3 waves, we should now see 5 waves. And I'd argue that we've got 5 waves here, running flat here in the 4th, in the 5th, and we've topped. So we've done a 3-3-5 A, B, C into a B, and now we've got our 5 waves down to come in the C to much lower pricing in Bitcoin. So what does this target here represent? Well, I've got a number here at 42,294.85. This represents a 38.2% retracement of primary A to find our B. So this is what we expect, between 38.2 and 78.6. We expect to find our retracement. If I drag a fib down from the top to the bottom, okay, have I just gone slightly beyond it? You can see that I actually need to move this little green line ever so slightly. It's even more accurate than we suspected. I must have misplaced it slightly. There we go. So we can just move this price up. So as you can see, we literally came to the tick. So we did a 38.2% retracement. Now, this also represents the 161.8% extension of intermediate A. What does that mean? Here's intermediate A, and then B, then C within our B. Okay, so actually we need to change this labeling down a notch to minor. This labeling needs to come down to minute. Just bear with me. I'm just doing a little bit of housekeeping. I realise I've come out of the wave degree slightly into the wrong. Mislabeled it slightly. So A, B, C, this is minute. And that takes us into a minor A. There we go, fixed it. So minute level into minor, 3 waves here. So 3, 3, 5 into a C of our B, looking to find our C down. So if we take a measure of the length of A here and project it from the B, we find that we get the 1618 extension of the A here, which overlaps perfectly, well, almost to the tick with the 38.2, which is the green line here. So there's double resistance up here. So we've done 3, 3, 5. So I think we've turned and we're now heading lower. That's my suspicion. For as long as this level at the 38.2 holds, 4252 spot 82, with the 2 extensions we've got up here, I suspect that this is a 3, 3, 5 completed and we're heading lower. We can confirm that we've finished whatever this is. So whether this is 5 waves into a 3-wave pullback for a bullish setup, or whether this is 5 waves complete, we can confirm it. So let's just take a look at our indicators for a moment. I know we're doing things out of sequence, but sometimes it's interesting to do them together. It can clutter the chart a bit sometimes. We can see how as we climbed up in this move here, we started to find and develop a negative divergence, a bearish divergence. So 1, 2, 3, from our 3-wave peak here, which is the peak in the RSI as it should be, and the peak in the MACD as it should be. We always look for the 3 or the 3 within the 3 to represent the peak of momentum. Since then we can see that we've had a divergence to the high here, which is the wave 5 high, and we can see that here also on the MACD. So since setting in our 3, this high to this high to this high to this high has set a bearish divergence lower. So this is a sign that we're about to turn, and we should be on the lookout for a reversal of some sort. Obviously the other way we can do this, as I've talked in my Patreons before, and I've got another video coming out on the standard trade setup in which I use this to examine trade setups. We can see that if we take our wave 2, I think we'd have to propose it to be here actually. You can see that we've got we fall out of our pitchfork beyond the extreme bound. That's another sign that we've completed this 5-wave move up. We've got bearish divergence on our indicators. We've fallen out of a pitchfork which contains the price up until the wave 5. We also could use a simple channel where we can simply take the bottom of our wave 2, project it to our 4, project it from our 3, and once again we can see the 5 finishing around the median line, and we have since moved out of the channel and moved lower. So plenty of ways of finding out that we've completed a move and now we're coming back. We don't know for certain whether this is 5 waves in a move going higher, although I highly doubt it. If this is the correct count, this should be 5 waves complete at the 38.2 and the 1618. So I would suspect that now we're putting in a series of 5 waves down into a wave 1. So maybe 1, 2 here, 3, 4 here, 5 here. We're going to do something like this into a 2, then comes the 3, then comes the 4, and so on and so forth. And we start to build 5 bigger waves all the way down in our C. So that is essentially the bearish case. The case that I secretly keep my fingers crossed. Well, not secretly, I'm telling you. I openly keep my fingers crossed for, because I like the idea of being able to buy Bitcoin at a significant discount. I mean, who doesn't? If we're in a wave 4 here, why wouldn't you want it cheaper? Right? So what are our targets? So we're going to switch into log now for a minute and get a better look at this chart. So as part of an exercise, this is quite a shallow retracement, 38.2 in linear price, and that's raised a few question marks with some people saying, oh, that's very shallow for a zigzag. It is what we tend to see as the minimum retracement for a zigzag of a wave B before going lower. However, I would like to point out that if we look at this in log, we get a different picture, and this is why we often, because we have to remember the size of these price moves and be aware of both scales. Now if we come down in log, we can see that it's almost a 50% in log scale. So I find that quite a convincing correction, A, B, C into log. So log scale is almost 50%, so it is significant enough of a bounce in 3 waves, I would suggest, to have completed our wave B. So if we are moving down now, what are our targets? Well, all we have to do for that is to go up to our top, come down to our bottom, our A, and project from our now level of a B, assuming that the B is in, and I am assuming on this chart that the B is in. We have 25751 spot 10 as our 61.8% extension. This is our first target for a C. The reason being, it would be a short C in comparison to the A. However, it clears the bottom of the A, and that's the only I was about to say hard rule, but it's not a hard rule. It's a very, very strong guideline in Frost and Pretcher. Okay, so if we're coming below the A, that's where we should expect to see the C extend beyond the A. It does in almost every circumstance. So the best fit, the golden ratio fib relationship at 61.8% extension of the A is at 25751. That fulfills the first requirement, I guess you could say, the strong guideline for an ABC zigzag down to here. However, that's not the most likely target. The most likely target is parity, which is 1 to 1, so C equals A, and that brings us down deeper to here at 18876 spot 53. This is 100% parity, and this would give us time, if this is a 1 2 of a 1, 3 4 5 of a 1 2 3 4 5, to bring ourselves down in a C wave to complete here at parity and pick up Bitcoin for under 20k. Now I like this scenario because I think this would cause some serious panic and some serious concern and some liquidation events. It would help shake people out, because people who are not looking for these kind of fib targets are probably just looking at the all-time high for a retest or some obvious basic levels of support and resistance, and I think a break of the 20k high would really shake people up and would be a wonderful opportunity for us to swoop in and buy Bitcoin cheaper. So I think that's something. Maybe it's just my personal bias. I hold my hands up and admit that I'm biased and I want it to come down here. It might not. We could stop at any time. Once we get beyond the A, we could stop at any time with the C. Okay, it doesn't have to come with steep. Just being greedy. Okay, so give me the benefit of the doubt that the most likely statistical scenario is parity between A and C. It's what happens the most often. Doesn't have to happen all the time. It's just what happens the most often. It just so happens to be a very pleasant situation if it does. Okay, but that doesn't mean we have to stop there. We could come deeper. Well, 123.6 would be the next target, and that's 15.560 spot 31. Wave C extensions do occur. They're less common than wave 3 extensions in an impulse, so less likely than parity, perhaps a little more likely than the 61.8, but we don't know. We'll find out as time progresses, won't we? So there you go. That's the bearish scenario as I see it. It's still probably the one I favour. It's still probably the one I'm leaning into the most. Could be wrong, and therefore we have a bullish alternate. And that bullish alternate is based on the idea of what happens if we go above this level and we stretch that 1618 extension of the C of the B and go past the 38.2% retracement of the whole move of the B. Well, in that case, I think we probably have to consider a bullish scenario. It could still be a deeper retracement, but it's getting less likely having gone past the 1618. So perhaps the bullish scenario starts to become more accurate at that point. I'll just ignore where these numbers are placed. They're just thrown up here in case I need them later. Right then, so let's look at this bullish scenario for a moment. And I just want to bring up an old friend which I've had on here for a long time, which is our pitchfork. And this is based off the expanding flat. Here's the three: A, B, C, 4 complete. Very big 4. Sorry, very big C in the 4. Far too big, most people would argue. Having gone past the 1618, having gone almost to the 2618 extension. Not something we like to see, but it can happen. But it's not something we like to see. So we've been putting this as the alternate, saying it's the less likely. However, I would like to point out the accuracy of this pitchfork. I know I've done it before, but it continues to be in play. Continues to be in play. Let's take our brush. So from A pivot to B pivot, the first test was of a median line. We then move towards the outer bound. We then test the median line again, back test the median line, move to the outer bound, move straight to back test the median line, move down to the 6018, double test here, bodying the candles above the 6018. Then we bounce along the 38.2, a whole series of lows. I don't know if you can see them, I'll just zoom in. A whole series of lows bouncing along this support. Fall through, find support at the 50. We make an immediate run straight through the median line. Do not pass go, do not collect 200 bucks. Stop at the 38.2, push for the 61.8 and the 50, don't quite make it, come back now, back test, and now we're falling. So a retest of the median line here and another bounce would be likely, and then seeking out lower levels, and we can start to see our Elliott wave structure building up. Now, so even though this is here to support the idea of an expanding flat, and it does seem to be providing geometric support for the market, because that's what algorithms do. They seek out levels, median lines, support, resistance, downward trend lines, upward trend lines, so on and so forth, and they just kind of bounce along them, right? And that's what our pitchforks tend to show us. So this is still very, this is still very much in play, and therefore we should, even though the unlikeliness of this count is higher, the probability of this count is lower, I should say, than the bearish count, we have to acknowledge that this is still in play. Okay, it's not coincidence. So on that assumption for a moment, let's interpret this the best we can. One off of the low, 3 wave move into an A, expansive B, zigzag into a C here. So A, B, B, C. Now actually, excuse me, this is mislabeled, isn't it? This cannot be an ABC. This has to be a combination. If I'm labeling that way, it has to be a combination. Free wave W, free wave X, free wave Y, with a double combination within it. Not something I particularly like to see, but that's the best I can do with it. So that becomes minor, yes. So we get a 5 wave move into a 1, and you got to come down to some small scale time frame to see it. It is there. I've gone through it on smaller time frames in previous videos. It is there, and then you get an expanding flat into a W, zigzag into an X, and then a double combination in a Y to find our 2. WXY is not that uncommon in a 2, but having a WXY within a WXY is not ideal. It's not breaking any rules, it's just not ideal. So 1, 2, very deep retracement. So it's either a B in a flat, or it's a very deep 2. In this scenario, we have to assume it's a deep 2. Since then, we've had an impulse off of a low, so this becomes, as we've seen with our pitchfork and our trend here, this becomes a wave of lesser degree inside of what is now an intermediate 3. So intermediate 1, 2, minor 1, 2. Super simple. We cannot break the wave too low if this is correct, and that's our cutoff point. That's the invalidation point for this bullish interpretation. So back here, let's just pop a price on it, pop a ring on it, down here. There you go, 29,311 spot 19. When you come below this, this is wrong, and the bearish case is right. How far that bearish case will progress, we will have more of an idea as wave structure develops. So if this is correct, though, however, the bullish case, we will come down in 3 waves, we will bounce, and we will go higher in a wave 1, 2. So I recently recorded a video which I will publish for my patrons while I'm on holiday so that they don't miss their weekly exclusive. It's another STS video, the definitive edition, where I show how you can pick your standard trade setups with safe stops, using your watch lists, using your price alerts, using the standard trade setup to pick up safe trades, and even if you're wrong, you're limiting losses. So if you're on the Patreon, you can look forward to that. If you haven't joined yet, maybe you want to join in time for it for next week, but that will be coming out, and it will show to you here how, let's say you are bullish, you've convinced yourself this is an impulse wave and you want to trade it. Well, the opportunity is coming here, and I will explain in that video how it works and how you can set it up safely with minimal risk. But in the meantime, getting back to the video, some kind of 3 wave move, and then we'll be moving back up. Okay, so keeping it super simple, what have we retraced thus far? Right, so for me, this means basically going over to my golden fib. So I have the 50, 61.8 and 65, which is the overrun for the 61.8, and for me, traditionally, I won't look at using my STS setup unless I see 50 to 61.8 get hit. Then I can set up the trade in a safe manner that I'm happy with. But for me at the moment, this is not done enough. But if you wanted to be bullish, let's say you come down into this zone, the 50, 61.8, and you're looking for that bounce, right? In which case, we would go back beyond the 1 and head higher. And at that point, we have to assume that we're in a wave 3, given this count. And that would be a good long trade if it worked out, wouldn't it? Going up in a 3. Okay, so that would be the bullish scenario. We've done 5 waves. We've broken trend of this degree. We've broken the channel of this degree. We've seen the bearish divergence here, showing us the completion of this move. Now we're in a retracement. So we've done 5. We're looking for 3 from a bullish perspective, and then you can get in and go trade higher if you wanted to use that setup. The bearish count suggests that this is 1, 2 coming down, and we will know because here's the invalidation point. So let's just put that up on the chart and say bullish invalidation. Like so, and that's the 2 counts that I see in Bitcoin at the moment. So let's discuss one more option then, because 2 is not good enough. We're going to come over to our simple chart now. Bitcoin naked chart, as I call it. We've discussed the possibility of this being a B wave complete into our green box that we spoke about when last using this chart. This is a chart I use to doodle on and do things quickly on. So we've discussed the idea of this being a B and therefore this being a 1, 2 and coming down to our levels looking for our C. And we've discussed the possibility of this being a 1 coming into a 2 ready to bounce into a 3. Brilliant. What about secret option number 3, which is we haven't reversed and we're not going lower. We haven't done an impulse and we're not going higher in the long term, but we are going higher in the short term. And this suggests the one option, the last option, which is the wave C didn't stop at the 1618, but it's going to extend further before reversing and tripping everyone up. Now we have to consider this scenario because this is the scenario that would hurt the most people. And whichever scenario in finance, in any asset in trading, will hurt the most people, we have to give it the benefit of the doubt because that often occurs. You know, this would bring in the most bulls, and this would squeeze the most bears simultaneously. So let's look at some of the extreme targets for this wave C. So let's do it in linear first. Now we know already that they're at the 1618. So we don't really want to see the C go beyond the 2618, giving us an extension that would start to become very extreme for a C. So let's leave it there and say that's our cutoff point in linear. Now let's move into log scale. We've got to give both the benefit of a doubt. We're dealing with tens of thousands of dollars price swings. Here's a 1618 in log, a little higher than where we topped out, but the 2618 pushes higher because obviously we're in log scale. So this would be the cutoff in log, I would argue. Now let's have a look at our retracements from the high. Okay, off of log scale we have 61.8 here. We won't come to the 78.6 I don't think in this scale. In log scale we could come to the 78.6 in log and still legitimately have a retracement in place. And then you've got the 61.8 lower here. Golden ratio. Okay, so now we've got a bunch of lines up here which cover both log and linear scale for our 2618 in linear, 2618 in log. Our 618 in linear, our 618 in log, 786 in log, they're all up here. So this creates a big box up here where price could potentially come. And that means that we'd be extending this higher. Now, how can we do that? Well, we can't have an ABC if we're doing that because we've counted 5 waves, right? In here, 1, 2, 3, 4, 5. So that's a 3, 3, 5 pattern. So this would have to be a 3, 3, 3 pattern in order to push this higher, because there's no way, I don't think, we could have only done a 1. And if this is a 1, 2, 3, 4, 5, we'd be going way too high, and the bullish case would already be on its way to making new highs by that point, so we wouldn't have to argue about this anyway. So what we'd have to do is change the ABC here. We keep the larger A and the larger B, but this now becomes a 3, 3, 3 pattern. Okay, so we would label it WXY. WXY into a B. This is less likely, in my opinion, overall. First of all, the WXY is there to surmise a sideways movement. Like we had this drifting sideways move here for our smaller WXY. We don't tend to use WXY to explain such a extreme extension or retracement, and ABC is going to fit better. And of course, in a bullish scenario, that's going to signify a wave 3 such an extension will be. So for me, this is less likely. But because it has the potential to trap a lot of bulls and crush a few bears on the way back up, we have to keep an open mind and say it's possible. If there was a primary, an alternate, and a tertiary, we'll say primary, secondary, tertiary, my primary bet, my primary belief would be that we've topped in a wave B, 1618 extension of VA, 38.2% retracement, and we're now going to come down and start finding our wave C at much lower pricing. That's my primary. My secondary would then be that we've put an impulse in. We're looking for a 2 before going higher. I consider this scenario less likely than the first. And then the final one is the tertiary scenario, which is we're going to have a series of free wave swings to a higher pivot, not far from a high, which is going to hurt the most people. Alright then, I'll leave it there in terms of our Elliott wave analysis, and we will just do a bit of basic technical analysis now. So we'll hide everything. We'll come out to the weekly and we'll see how things are looking on a more basic level. So we have 10 exponential moving average in yellow, 20 in blue, 60 in orange, 250 in green. And we are going to bring up our momentum indicators and see what we can see on the weekly time frame. So to begin, the 60 on the weekly is the support level that has played the most crucial level in terms of an exponential moving average. We've wicked below it here, wicked to it here, wicked below it here, wicked below it here, wicked below it here, but we've never bodied a candle below it. So this is either the completion of the correction and the 60 gate provided the support for the bullish scenario 1, 2 and higher, or this is the wave A support. We had to stop our free wave move, our initial move of our free wave moves somewhere, and this was where we were going to stop it at the 61.8. So a move up and then a test and final break of it, giving the bears some final, the bulls have defended this space, the bears need to retreat, regroup, get their act together, bring back the battering ram and the fire arrows and shit, and just smash through this wall and then keep going. Right, and that's often the case. You come to a level, you can't get through it, you got to ease off, come back, try again. So we could be in that bearish scenario where this is provided support. That's still my primary support idea. Another reason why I'm leaning towards that is at primary wave degree, we've seen it multiple times in multiple and in previous cycle waves. When I looked at my major Bitcoin cycle level count a long time ago now, I pointed out how we tend to go from overbought to oversold, overbought to oversold, overbought. We haven't made it to oversold. So a final thrust down in the C would bring us into oversold conditions, push the MACD back into deep red, and then that would be a stronger sign of the bottom. So let's come down, but we are cooling off, alright? On the weekly time frame we can see that the bearish momentum has been cooling off. So we don't know if this is the bullish or bearish scenario for certain yet. We could just come up, kiss the average, roll over. Let's come over into the daily time frame. Let's just have a look at our volume profile while we're here as well. Okay, it's just looking at it for myself for the moment. I just want to check something. So, right, daily time frame looking more bullish. There's no denying it. Looking more bullish here. We have had a 10 cross over the 20, cross over the 60, cross over the 250. We've managed to drag the 10 back above the 250 with the price above it, with the 20 just crossing through it as well with the price above it. Haven't got the 60 back above the 250 yet. Very close to doing so. That would be a golden cross, as we say. Now, as I've pointed out before, and I keep doing this in my videos, I know it's a pet hate of mine, and I see so many analysts out there on Twitter or YouTube who tend to use these, which are death crosses and golden crosses. Now, I often point out that a death cross, which is where most people join the market to start shorting, normally symbolises the end of a downward move, not the start of one. Here's the 60 crossing through the 250 with the price below it. Here's the death cross. What happens? 1, 2, 3, 4, 5 days later, we bottom and rocket. So if you shorted this on the death cross, you would have got slapped in the face. Okay, doesn't always happen, but it happens way too often to consider that a reliable form of analysis. Okay, the same's going to be true on the other side. It's often the case that when we come back above the 250 with the price above it, and we get a golden cross, that can sometimes signify a high about to occur or even having already occurred. And then we come back down. So, personal opinion, you might think I'm wrong, But in my experience of observing these averages over years and years, this happens all the time, and it can often trap people. In fact, I'm so cynical that I sometimes think it's sold on purpose to do that. Okay, alright then, so getting off topic a little bit there, I think. Come back to overbought, and we've come back to an extreme level of overbought, right, in a very small move. Makes me suspicious, especially while momentum's dying off here in the MACD, darker green bars in the histogram, crossing the average, crossing the signal here, looking to head lower. This looks pretty weak. This looks like a temporary top to me. Could be wrong, but it looks like a temporary top, and that this could be one of those bullish signals that drags people in, gets them to go long, provide liquidities for the bears, and the bears will be showing up because of those extra bulls, because of that extra liquidity. The bears will be showing up back at that 60 EMA on the weekly with more ammo. More bears pushing the ram, more power, more likely to be successful next attempt to push the price lower. Okay, just an opinion. So we're going to leave it there, guys. I hope you've enjoyed it, and if you're new to the channel, you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And you are going to have to put up without me now for the next 10 days or so, guys. I'm going on holiday tomorrow, and I'm hoping for good weather, because I'm hoping to lie on the beach, play with my daughter, enjoy my family who I'm going up to visit, sit in the sunshine and do no trading, no charting, and just have a proper break for the first time in months. So you're just going to have to cope. And once I'm back, I will hit the ground running as I always do and play catch up. I promise you that. Alright guys, take care of yourselves. I hope you have a wonderful week or so, and I will see you when I see you again. Bye bye. All the best.